Hi, I'm Peter Rose, founder of Longwood Currency Trading. Trading Forex by waiting to enter. What do I mean by that? I just got off the boards and I did exactly that. So let's tell a story about that. Before we get into that, I don't know whether you can see in the background, it's bright and sunny. We're end of January of 2026. And we had a pretty big snowstorm overnight, and the things really piled up. And I took some video of that yesterday as it was really beginning to come down heavily. So I'll take a pause here and show you a little bit of that. So why did I show you a clip of a snowstorm? Who gives a shit? Well, there were some things that we needed to do yesterday, and it wasn't safe to do them during that storm. So we waited before we got in the car to go out. And even then we didn't use the car, we used the truck because I got four-wheel drive in the truck and we needed it. So trading Forex by waiting to enter, what's that all about? Basically, it comes to, you hear the phrase, wait for price to come to you. What does that mean? Well, when I know where I want to enter, I set my limit order there, or I put a horizontal line on the chart, and when the price gets there, I go in. Okay, so there's two issues. First, do you have really solid conditional based rules that provide you the, not an analog answer, but a digital answer to your question of where can I get into this trade? Where's the best place? And that's the entry analysis phase of my life cycle of a currency position that I teach in my fast track course, which is entry analysis, position management, and exit methodology. That's the process, the life cycle that price goes through, or a position goes through from the time you come into it until the time that you get out. That's the life cycle of a currency position. Enter it, manage it, and exit. So waiting for price to come to you indicates that you've done your entry analysis, and that entry analysis has indicated that if price gets to this point, that's where it would be good to get into. If your rules aren't telling you that, if you're just making that up on your own, what will happen is that you'll create this, okay, I'm going to wait for price and it's going to come here. But because you don't have a rule that backs that up, it was just a guesstimate. What will happen as price moves toward that point, you'll say to yourself, and I'm telling you, you think about it, you're going to say to yourself, price is moving in the direction that I anticipated it to go in. It's got great momentum. I'll market order right now. Hit bid ask, boom, we're in. And you're 5 pips away or 4 pips away. So now, instead of 15 pips, you're going to make 20 because you're in 5 early. The catch to the deal is that you didn't wait and you got in, and now price doesn't make it that last 5 pips to where it was supposed to be a good entry point. It turns around and it barrels downward 15 pips. So you're in the red 15 pips. And you're saying to yourself, well, it was moving so marvelously toward that point. It's obviously just doing a retracement, and it'll go back up there and I'll be all set. And then you're 20 pips down, you're 25 down. Finally, you hit 30 pips down and you throw a flag on the field, you're out. you're 3% down on your risk, and it's a miserable freaking day. That happened because of two reasons. One is a possible reason is that you really have to relook at your rules and the conditions that your entry rule provides for you in order to determine whether you're going to market or whether you're going to limit in entering that trade position. And if you're doing a day trade where you're looking for a substantial number of pips, then you got to be very careful there where you set that limit. Or if you're in a tight bound range and you just want to clip it for a few pips, you got to pay real close attention to it and make sure that's a good spot, that at least go five or 8 pips more, and then you can get out. So if you don't have really good rules to do that, if you're doing all this foolish crap with Bollinger Bands and RSI and average lines and support and resistance and all that shit, there are systems that people build that use all that, and those systems will break down because a system is a rigid thing. When the short MA crosses the long MA, you do this, right? That's a system. That's not a process. And so in my life cycle of a currency position, I'm not dealing with a system of trading. I'm dealing with a process of trading, and that process is governed by the successful completion of conditions. If this condition about what's going on is true, and this condition is true, and this condition is true, and the final condition is true, then I get a binary go or no go signal. And in that case, it would be a go signal, and I execute whatever it is that the rule is doing. If I have a condition that's no, yes, that's true, and the second one is yep, that's true, and the third condition out of 5 is false, that's a binary no. I don't execute the rule. But in order to get those binary responses back, to make things easy to trade, you have to have conditions under them. You can't just say when the long MA or the short MA crosses the long MA. That's not a condition, that's a system. Now, if you're looking at short-term trading on let's say a golden cross basis, it doesn't work. It only works when you get up on maybe 4 hour. And then if you look at it and you get your going, let's say that those cross points, price has gone 40 pips. Well, you're not going to get 40 pips because by the time you get the alternate cross, then you've lost 10 going in and 15 coming out. So you're way behind on the game. It would be better if you had a process so that you could capture more of that potential price action, is what I'm saying. So trading Forex by waiting to enter implies a much deeper analysis than possibly what you may be doing. And that may be the problem that you're facing in your trading. You're not getting just the results, but it is the results, and it isn't based on what you're doing today or over the last 2 months or whatever. You're basing these conditions in your rules on metrics covering large sample size of not only data but also time. It doesn't do any good to have 100 trades in a month and say, oh, I've done 100 trades, so I've got a pretty good data sample size. Well, yeah, from a data standpoint you do, but not from a time standpoint. Nobody's talking about this stuff because they're not as familiar with the mathematics of this stuff as I am. I've got a bachelor's degree in physics and almost a minor in math, and I did 40 years as a real estate investor. So I know a little bit about math and how to apply that math practically. And when the math is giving you a practical result, but you're not meeting that result, is it you that's wrong or is it the math that's wrong? And how to unscramble all that. And what I teach in my fast track course is a simple way to eliminate most of all that crap and just focus on a few basic metrics and how you can use them in order to write valid conditions in your rules so that when you're in the entry analysis phase of the life cycle of a currency position, for example, and the rule comes back and says, yes, you have an entry if this is the condition. If you follow that, based then on a solid risk management framework, you're going to be okay. But if you're making your risk management up on the fly, then every time you make a trade, you've got to reevaluate the risk. And that's not something that you want to be doing. That makes your analysis process complicated, because now, instead of just talking about one thing, now you get a signal from your rule that says enter here, that's one thing. But if you're trying now to do that in real time, figure that out in real time without a rule, and you're adding in, well, if I get it at this point, then my risk management will be this. But if I go in here, then what's my risk management? Does that change? Well, it could very well change based on the structure of order flow that is immediately surrounding that particular position that you have identified as a good entry point, as well as the position that you're targeting as your take profit point. So now you're dealing with two different variables, and you think, well, I one or two things. But in mathematics permutations, if you have two choices to make, A and B, then it isn't just I'll choose A or I'll choose B. It's I could choose A, or I could choose B, or I could choose AB, putting more emphasis on the A and then the B, or I could choose BA, more emphasis on the B than the A. So out of two choices, I've complicated things to four permutations. If I have one choice to make, and as I get it back to my how I show folks in my fast track course how to build rules with binary results that come back with the risk management implied within it, then you have one choice. My rule says I've got an entry point at this level. I've set aside 2 hours to trade today. I've been sitting here for 45 minutes. I haven't seen anything. This just came up. It's implying that in 15 minutes, I may have a trade that I need to get into. Well, if it's going to take 15 minutes for that to mature, how long is it going to take for the trade to play out? And now you say, well, I don't have enough time to sit here and make that trade and go to work because I want to be here. Because as a day trader, what the fast track course tries to teach is how to get all your trading done within an hour or 2 hours of getting involved. Today I did 1.3% against my risk, and it took me about 20 seconds to identify the opportunity yesterday after I had closed out of my positions and stuff, to where that next entry point would be. And so I set some orders, a limit entry, and then a take profit order, and then just let it run for the rest of the day. I'm fortunate, I'm retired, so I had the rest of the day to sit there and look at it. But that condition to that trade didn't happen until early this morning. So when I looked at the chart situation this morning, I said, that the prices move now closer to that, I'm going to go in. So I did an entry, and in, I don't know, it was like 5 minutes, I got my 1.3% against risk. When you get these points correct, oh, and by the way, the point that I set for my limit exit order, profit order, price went through that went beyond it by 4 pips, and then did an immediate reverse. And if I would have been dubbing around, or I would have set that over the night and not taken any awareness as to what was going on, and that price had not come down to that entry point, as I only made it with a 4 pip gain. It turned around after it went down and got my order, it turned around and went, if I would have been stuck, if I wouldn't have had the right profit target, if I would have been greedy and set it just 4 pips further, the trade would have been active, but it wouldn't have been closed. Price did a reversal, and if I would have been in there at the time, I would have lost 5% on that trade, on that one trade, because it happened when I was asleep at night. So when we're looking at making decisions about waiting for price to come to us, we have to be responsible in the feeling that we have as to the clarity of the decisions that our rules, and hopefully we have rules, the decisions that our rules are advising us to take are valid from a mathematically probability standpoint, so that I'm only working with high probability stuff. Now, a high probability trade may only be worth 3 pips. That's fine. I got 3 more pips than I had the day before. If that's all I did was 3 pips a day for 200 trading days, that's 600 pips. Trading at one lot position, $10 a pip. That's $6,000. That's a pretty good return. But the reason that you just don't get 3 pips is because you're taking losses as you go through. Let's say you're a 60-40 trader. Take big losses, 4 big losses and 5 small gains, and you're in the shit. Well, what can I tell you? So we're not just talking about waiting. That's what these guys that I see on the videos are teaching. You got to wait for price to come to you. Well, great. What's all the other information that's around that? You're not providing anybody, and it's not secret, but it's a process, and you can't answer a process event with a stupid thing like, well, when the short MA crosses the long MA and the RSI is 70, that's when you can go in. No, you can't go in. Those are systems, and they do not provide the correct answer to the question of how long should I wait before price goes from where it is till it gets to my entry point. And that has to do with the time that's available for me to sit there at the desk and trade. It has to do with, well, a lot of the other things I've talked about in this video. I think the important thing to grasp here is that trading Forex by waiting to enter is a great idea. But if you don't understand the process and the theory behind the whole thing of trading, then waiting to enter, you're going to wait to enter for a golden cross and an RSI confluence, and you're going to make it work a few times. And then you're going to get bold, and you're going to say, you'd be one of these guys who makes 50 trades in a month or 100 trades in a month, and you're getting started, and you think you've got it all locked up, and then all of a sudden in month 2, you have a major swing point and a reversal of price, and now you're stuck because it's going to go into a range for a while and then drop out of sight. And your rules, the way you're identifying your systems and stuff are static. They're not flexible to notice those changes. That's why the robots aren't successful in the long run, unless you're Simmons, and then you have not robots, but you have dozens of PhDs in all kinds of different disciplines that have developed probabilistic rules through, well, it's a probabilistic analysis of the data that provides real-time rule development that actuates transactional price action and trading. We don't have access to that stuff. It's great that somebody else can do it, but because somebody else can do it doesn't mean that you can do it. The fact that, I've taken courses before, like y'all have. I took a course, a very expensive course one time. I couldn't duplicate what the guy was talking about because it was a system. And I wasn't trading in the right price action environment where that system would work. But that was presented as the way that you do it. And, his profit targets were 150 pips and or 50 pips, and his risks were 50. They have 150 target, risk would be 150. It just doesn't work that way. For him, it worked, but for me, not. And probably that type of training doesn't really help you very much. So when I say that I teach in a process-oriented manner, I'm talking about not only an educationally sound manner, but also a mathematically sound manner from a probabilistic standpoint, and I know what the hell I'm talking about. And so when I work with somebody, they don't need to know any of that. That's all background. That's where my skill comes in, to be able to look at somebody and say, look, here's your trading metrics. This is how you look at your trading. You got a weak spot here. How are we going to go fix that? So if you're taking the course, we do this analysis. How do you fix this? How do you fix that? Where do you fix that? Well, where do you know what to fix? It isn't just that you did something stupid, because stupidity is based on some very complex decision-making process. You can't just say, boy, I was really stupid when I did that. Well, why did you do that? And why are you stupid in responding to it or emotionally wrapped up into it? Well, those are the issues that a good solid rule will help you overcome. But man, you can't figure this stuff out in real time. It has to be something that you work out. If you work it out ahead of time, then the trading becomes, as I say all the time, this stuff is simple. It's very simple. And when you get it right, like today I got it right, I got 1.3% against risk. Yesterday I lost 0.2%. And the day before that I made 2.1%, 2.01% against my risk as profit. And I'm up, I don't know, 11.5%, I guess, for the month so far, and we're running toward the end of the month. When I'm recording this, tomorrow I could lose 4%, but I'm still very well in the money and very well managing my risk, so that the big gotchas don't happen, because I'm not trying to figure stuff out in real time. I'm not trying to figure out how long I should wait to enter the trade, because my rule provides me with that digital answer, as opposed to an analog answer, which is, well, you know, whatever. Really? Whatever? I'll put whatever amount of coffee beans into this thing and grind it up and drink it. And, you know, it's probabilistic that it'll be drinkable, but not probabilistically really good. I have to really do some work at calculating the amount of grounds that I put in for the amount of water that goes there. So if I want to figure that out every time, great, have at it. If I have a sound taste profile that I'm looking for, I have a rule. And that rule is based on conditions. Now, I'm drinking a Guatemalan coffee today, so those rules have to change, as opposed to drinking just a plain 8 o'clock coffee or a Dunkin' Donuts coffee or whatever. The amount of grounds that you put into your K-Cup is, or into, I do French press sometimes, into the canister for that. That's all. You have to have answers to all that. Just like my answer for trading pound dollar for an entry point may be very different from trading I don't know, Aussie and a Moroccan currency or something, because it's an exotic pair, and I have no idea what price action like that is going to be. So I couldn't tell you what that would look like, because I don't study that pair. When you are trading Forex, you must understand how to let price come to you such that it continues to go in your direction, because you got a valid point, and then that you have a reasonable profit target that you can shoot at. Hey, if you have any questions, I'd be happy to get an email from you. I'd love to chat with you, find out what you're doing. If there's any way I can help you out, no charge, just give you some ideas of what to do. I try to do that all the time. That's fine. I've got a course. I don't sell it. If somebody's interested in, you can ask me about it. And if you want to buy it, that's great. If you don't, that's fine. I don't care. So My concern is for you and understanding how to trade Forex by waiting to make your actual entry. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.